Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-afternoon session update for Tuesday, March 3rd, 2020. It's 1:57 p.m. Eastern Time, so we have about 2 hours to go. I wanted to do another video that, the charts are out there. I put in QQQ as a short trade. For those of you that think I'm schizophrenic, I told you I'm an active trader, and the charts are dynamic, and so is my analysis. Now, what happened today is the Fed rate cut, which call me too contrary, but it actually made me more bearish, whereas my plan originally, as I said in the previous video, was to continue to trail up stops on some swing positions in QQQ, looking for at least another 3% or more upside. I like I said, for the reasons discussed earlier, I think there's a decent chance that the Fed rate cut, the emergency rate cut, can backfire, and so I want to do an update right now, and right or wrong, I'll show you, how I'm trading and what I'm looking at and the levels I'm watching. And again, I think frequent updates are warranted when the market's moving like this. Some big reversals today. So first of all, here's the cues. I want to say we broke down now from that bearish rising wedge pattern right there, covered earlier today. In fact, we have a string of day trades that have just produced, per contract, we're probably talking, 5 figures in gains per contract on NQ today. Started out this morning that I posted, let's see, right about here. This first chart today, screenshotted about 6:30 in the morning. For those of you that get up early, I'm sure the California West Coast traders weren't up yet, but either way, NQ continued to stall at the bottom of that T2 resistance level, offering a short for a pullback to that first target. You can see a bounce scenario there. Can't zoom in on the trading room charts. It's a different kind of software that runs that. And just the cues have been extremely conducive to trading. So that was that first chart. Second chart here, boom, target hit, covered. Said I'd reverse back to a long trade. So what I'm doing here is I don't want to make it confusing. If you're an active trader or day trader, this is the stuff you can do. This is what I'll do. But at the same time, I'm short NQ in an active trading account. Day trading, I might be long elsewhere. As of now, I'm short across the board for the reasons I stated. So there it is. So you can see just how well the technicals are working out. Not every day is this easy, but boom, short it right here. Had a little, pop again, but that was news driven, and we went right back down there, hit the target there, bounce, got the target. I said that's it. I was looking for about a 1.75% bounce off that target, reversing back to short with a stop above 88.65 to try and catch another jog down to and possibly below the trend line, meaning this. So that was what was that, about 12:14, a little after noon today, and here's the updated chart there. That was that first one, and then finally we update it right there. Boom, target hit. But I made clear that instead of covering as I might normally, I was going to trail down stops and allow for a potential runner. A runner trade is one, as it sounds, where you just, instead of booking profits because you may reverse, just set stops, trail them down, and a runner would do this. And why? Because that's a bearish rising wedge, as I talked about earlier. So what happens is, on a bearish rising wedge pattern, you typically go up the wedge. You can bounce there most certainly and can continue to walk up the wedge, but the sell signal comes on a break below the wedge. And based on everything I covered in the other video, the fact that I think the Fed rate cut was a mistake, I want to say this: if they didn't cut 50 basis points, it might sound crazy, I would have been more bullish and I would have held long on those swing trades earlier. But no, I told you I closed most of them out, tightened stops on the rest, which had been hit, and then went short after that, and we're short officially on the site. So here's where we're at. That was the last one, and this is still now a runner trade. That was about 1 o'clock we hit that target, but going back to where we're at now, just to kind of show you how things have played out today. Boom, and nice impulsive red candle. This, we'll see how the day finishes. Sometimes you get these initial knee-jerk reactions, but net, I find it hard to spin this as anything but bearish. We have a Fed of 50 basis point, half-point rate cut. And let me share one more thing with you on that. Okay, just before the video, I made this comment. Flanny3 in the trading room posted, good point. Remember last emergency rate cuts back in the financial crisis era? Short term wasn't too hot of an outcome, and absolutely. So again, if you think, it's crazy. How could, 50 basis point cut? How could that not be bullish? Well, my reply here, I'll read it. Absolutely, rate cuts definitely work until they don't. So I went on to say, as Flanny mentioned, there are multiple occasions of Fed cutting rates only to see a subsequent rally either faded immediately or shortly afterwards, which we had today. Remember that big initial pop with a big drop in the markets following. Sure, generally rate cuts are bullish, but once they have lost their effect, the results can be devastating. Once the dip buyers that were conditioned like Pavlov's dogs to buy rate cuts realize that gig is up. And I went on to say, I recall posting back in November 2007 this following excerpt from the Wall Street Journal. At an unscheduled meeting on January 3rd, 2001, the Fed cut rates by 50 basis points, 0.5%. And again, an unscheduled meeting is what we just had. That's what they call an emergency rate cut, and they come in between their scheduled meetings at the FOMC. NASDAQ had its best day ever, rising 14.2%. From there, the NASDAQ fell 57% after that first rate cut in 2001. In fact, investors would have done better had they held off buying tech or otherwise, tech stocks or otherwise, until the Fed started raising rates in 2004. So anyways, I went on to say this. Look, we may or may not be at that point where rate cuts have lost their effectiveness. Only time will tell, but one needs to be open to the possibility. So, and then I said, I'm eager to see how the market ends up closing today as well as the end of the week. And I'd prefer to be short unless I'm stopped out before then until that happens. So, all right, so my mindset and why, I shorted the QQQs right after going long. And I said that in that post. To me, there's a lot of factors that go into a trade, but one of the biggest is the risk-reward profile. So I had a tight stop, and although this trade had at the time, and it's a lot lower now, but it had a decent chance of being stopped out running such a tight stop. And again, shorting on the day of a 50 basis point rate cut. Maybe they're just initially selling off now, and maybe everyone's going to come in and buy later, realizing, wow, that's a big cut. It's going to boost the market to new highs. And so at this point, look, I can tell you it'd be prudent to lower stops. I'm going to leave the official stops as is. And I only have one swing trade because my logic is this is either going to pan out, and so far we have a pretty nasty candle, a pretty big reversal off the highs. The Qs are down 3.55%, and if you look at from the high today, that's down on the day 3.5%. From that high, that Fed pop, 5%. What that is the algos and individuals that bought the 50 basis point rate hike, they got smoked. They jumped in there, stops were cleared on shorts, which paves the way for a bigger drop, and longs got sucked in, and if they haven't stopped out yet, they're going to be feeling the pain soon. And then what happens is simple: selling begets more selling. So those that jumped in there get stopped out. As I often say, fewer things in trading and investing are more bearish than a failed bullish breakout. Now it was just a pop. It didn't really take out our resistance level. We'll go back to NQ. I like NQ has a little clearer chart. I mean, it did on a spike, but that lasted seconds, and that was immediately faded. So we never really cleared that T2 zone. And I talk about this often. If trading on a 60-minute time frame, which I have been, all those trades I showed you earlier today, short here, cover here, bounce long to there, short again, and still short. Those are all based off this chart. You want to go by these 60-minute candles. What happened there is this where the candles closed, well within the top of that T2 zone. Okay, so back to the chart. Sorry, I had a phone call there. I had to take real quick. All right, that's it. I don't know much else to add other than, like any trade, it either pans out or not. If you want to target a more shallow target, that's certainly your call. Possible that I extend the target on this one, but I think that's where we go. It would it may mesh with that 60-minute divergent low scenario that I laid out the other day. That's still potential in play. Maybe not. We'll see how the indicators look. But if you didn't catch that before, it looks something like this. take a jog down, undercut the lows, blow out. There should be a ton of stops sitting below there. So we'll probably, if we take it, as I said earlier, I think if we get even close, we're going to go through there pretty darn impulsively. It's going to look ugly if that breaks. We'll probably get a big red candle. Stops will be cleared. If we then reverse from there, we hit that support on the daily chart that I'm targeting, we have the potential to put in a divergent low. Remember, divergences are not absolutely necessary. They're just something I look for. Divergent low off that's nice support too. In fact, that is the best support that I've seen by far on QQQ since this whole thing started. I highlighted some levels along the way here, but what makes that one better? Well, you have these major, reaction high. We traded in this range here for months on QQQ and finally broke out there. So along the way, we just kind of had that steady grind up, and we never set up any really solid or very well-defined support. And we reversed off the 200-day, but again, so that's it. Let's see how today ends. I may be doing this whole video, may waste my breath because we may just ramp up. I don't think it's going to happen. And again, that's where we have a nice reversal so far, especially if you're in the trading room, you've been taking those day trades. Not a bad idea right now if you're trading that NQ or even QQQ. If there was enough time in the day, I'd post charts of QQQ. One member was told me they took PSQ today, and what I did is I laid out a comparable target. They mentioned that in the trading room, and I said PSQ, by the way, is the non-leveraged short ETF for QQQ. So if you're not a big fan of the leverage, I don't mind it, especially on the index ETFs. It's not that bad. You can trade SQQQ or TQQQ. That's the 3x short and the 3x long. If you want to leverage it down a little bit, QID is a 2x short. Here, I'll show you real quick for those not familiar. SQQQ on the short side, 3x short. TQQQ is the inverse of that, the bullish one, 3x long. QID is the 2x short, and QLD is the 2x long. And then is of course QQQ is a 1x long, and then PSQ, which another member took, is the 1x short. And I stated that the comparable level for that bounce target, what did I say on PSQ? Nope, I'm looking at a 60-minute chart. That's not it. I was looking at the daily chart, and I said that the comparable level would be right here around $27 to align with my QQQ short. So you can see it there. It's just in reverse. See these major reaction lows? This is just a mirror of QQQ, and that's those reaction highs there. So if QQQ goes down to 195 or so, I have the actual support about 194.90, so we'll call that 195. I like to set my buy to cover orders a little bit above. That's where we should go. And if you're wondering, is it that bad to take out the 200-day? No, you can. Sometimes we go through it. It's not a good sign to be trading below the 200, and it could certainly open the door to more selling. And so we'll just have to kind of assess it as it goes. And I don't want to get ahead of myself because there's still quite a bit of downside till we get there. Another from where we're at now. So far this trade's playing out. We're profitable, but still about another 6% downside to get there. Let's see how today ends. There's always a lot of noise and volatility around a Fed, something like this. We haven't had one in a while, the emergency rate cut. So that's it. Let's see if there's anything else I want to show you. QQQ, this morning I showed you trend lines on QQQ and SPY. You can see that's been broken. There's that potential divergent low scenario on the 60-minute chart. You can see the PPO, and I pointed this out in today's video too. The signal line was coming to back test right here, and so far we have the PPO line turning down, so it looks like we're going to get a rejection there unless the market can turn around and rally up soon. SPY, same story. Breakdown, PPO is curling down, still down below the zero line, this dotted line right here, keeping the trend bearish for now. And of course IWM, which looked great recently. A lot changed today for me based on the emergency rate cut. And coupled with the fact, as I said before, we hit our on the last official trade, we hit our final target. And we also ran up to that 50% Fibonacci. So that was only potential, and there's a reason I didn't make that the an official third target. Just the risk reward just wasn't there. There was certainly the potential to do it, but not looking so good today, especially if this candle, if we close much below yesterday's lows. That's the way it works pretty much as we drop down here, I think you get down to almost a black hole. The more you go, the more stops are going to be hit, the more people are going to start to panic out and say, oh, the worst isn't over. And so the closer we get to this low, obviously, I mean, it makes sense, the higher the probability we're going to hit that price target, because we should come in and, like I said, start to see some panic selling and a lot of stops get hit, especially if we take out that previous low. Oh, by the way, there's a level to look at here, guys. I just noticed. I always talk about I like to use the 200 EMA, but I know a lot of traders use the 200 SMA, the simple moving average. Look at that. That's what we hit the other day on QQQ. I hadn't noticed that before, and that contained it perfectly. So there's another level to watch. You can see why I like the 200 EMA. It's done a better job of containing the lows than the 200 SMA. That's the red line. Here, make it blue or something so you can see the difference. I know in the video it might not stand out as much, but there it is. So you see more reactions on the SMA, and we pierced it intraday. But either way, we bounce off the 200. We bounced off the 200 SMA, simple moving average. So there's another level to watch. Maybe we get a second test of that. And then finally, the PPO on the Qs, I didn't mention in the other video. I noticed it right after I ended that video. We have the PPO back testing the zero line from above. So as bearish as I've laid out the potential for another leg down, this trend indicator is still bullish. That does a pretty good job. You can see we back tested here, kept the trend intact, had a not even a whipsaw. Again, that was a sell signal on that trend indicator from here to here. It said get out. You didn't, you're not a lot of money to be made short, but the market didn't go down. It didn't go up and went sideways. Cross there and a bullish cross back here. So it said the trend was bearish from there to there, and at least got you out of the market, and it kept you in throughout most of the big bullish trends. So we'll watch this one. So again, as I said earlier in the video, I think today's pivotal. Let's see how we close the day. If they turn around and buy it hard into the close, it wouldn't surprise me. Nothing surprises me anymore. The key is, there's some nice profits, especially for those of you that have been taking those QQQ short trades. Don't let it get away from you on the day trade. And if you're swing trading, if you took that one, same story. It's up to you if you want to lower stops a little tighter. You can give a little wider stops. That's, I'm going to just say this, that's really, in my opinion, the only way to effectively swing trade a market like this with 3, 4, 5% intraday price swings when the volatility is this high, the VIX is high. Because if you're running tight stops, 1, 2%, you're going to get taken out in the day-to-day noise. This is what it looks like on a 5-minute chart right here over the last couple weeks. And all these little zigs and zags, I'm measuring them up here. You can see the pop-up box to the left. That relatively little kickback rally, that's 2.65%. The next dip, well, until it was over, was about 5.8%. So this is what I'm saying. The key to swinging this market is keep your position sizes light enough, small enough that you can allow yourself a wide enough stop to stick with the trend and not get shaken out. And if you don't have strong enough convictions on where the market's going, or you want to wait for the sure thing, then stand aside. That's all. There's no reason to always be in the market. All right, we're going to wrap it up here, and let me make sure I got everything I wanted to cover. Yeah, that's about it. I have other things, but I'm watching crude oil. Somebody asked, and I said crude oil has been extremely positively correlated. So I'm not going to continue to do frequent updates. Here, I'll show you real quick. If you go to a 5-minute chart, here's QQQ, and let's overlay oil. We'll use USO. We'll just do it right here, and you can see the unmistakable, extremely tight positive correlation. So as I said, if you're long crude, you might as well be long QQQ now, and if you're short crude, you might as well be short QQQ or SPY for that matter, same thing. So all right, we'll wrap it up here and see how the day ends. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.